It's the season of IPOs. Zomato has successfully launched its IPO, Paytm is all set, and another few companies are planning to go public. Big Basket, for instance, which has been recently acquired by the Tata Group. We have our own ideas about how these stocks would perform. I have my own ideas about how Zomato's share price would fluctuate in the long term, and I've written about it. I'll put the link in the description. While many of you may disagree with me, the good thing is India's tech companies are now going public. The success story is elevating to a new level. Remember, we keep talking about the Chinese success story, the Tencents, the Alibabas, the Baidus, and all those companies. We keep talking about them. They started replicating the Western models. Soon they became big because of the market size in China, and then they went public, creating great success stories within China. Today, the Indian tech sector is at the same cusp. It's on the cusp of a revolution. And this is the good story. But when we talk about India's startup sector, India's unicorns, India's tech industry, we have to talk about the Chinese money. We have to talk about the stakes Chinese investors hold, Chinese companies hold, the likes of Tencent and everyone. We have to talk about it, and that's what we're going to talk about today. Last year, a news breakout. The People's Bank of China had increased its share in HDFC Bank from 0.8% to somewhere in the neighborhood of 1.1%. All hell broke loose because suddenly people realized, hold on, there's a lot of Chinese money which is there in Indian companies, Indian banks, and that puts us on a threat. Threat of data security, threat of perhaps propaganda being peddled by the companies, say the data publishing companies, things like that. Suddenly people realized, or rather woke up to the threat of the Chinese muscle money. People suddenly were not very happy about it. There were Twitter trends and protests and all those kind of things which usually happen in India. But the government took notice. The Ministry of Commerce came out with an interesting notification saying that any country which shared a land border with India, if they wanted to invest in any company, that had to go through a government approval process. Now, this notification was very, very important because there are already restrictions in place for Pakistan and Bangladesh. So this was government sending out a message clearly saying that we understand that the Chinese money is a threat to the integrity, to the independence of Indian unicorns, Indian startups, and we want to take back some control. And control that they took back was real. Then, of course, the Galwan clash happened. The anti-China sentiment was on a high. Then, of course, there was COVID-19, the Wuhan virus originating from China that devastated families and economies across the globe. So the anti-China sentiment was on a high, and it's still on a high. Because people are suddenly realizing that, hold on, the Aatmanirbharta we keep talking about, why can't we produce in India? Why can't we buy local? Why do we have to rely on the Chinese? And this Aatmanirbharta, these shades of Aatmanirbharta, this anti-China sentiment has also been visible in how the Chinese money inflow has been for the Indian startups in the entire year of 2020 and 2021, the last quarter, which ended in June. And that's what we're going to talk about today. Before the notification came out, between 2015 and 2020, China had poured somewhere in the neighborhood of $4 billion in Indian startups. So much that around 2020, 50% of the Indian unicorns are basically startups valued at more than 1 billion, 50% of India unicorns were actually backed by Chinese investments. And that was a problem. So much that in the quarter 4 of 2019, $2 billion worth of investment came from China alone for Indian startups. Then the anti-China sentiment kicked in. Then the Aatmanirbharta campaign kicked in. Then there was the impact of COVID-19, due to which Chinese investments, not just in India, across the world, saw a decline. Even if we talk about the BRI, the Belt and Road Initiative, which has somewhere in the neighborhood of $2 trillion worth of investments committed and there across the world, even that saw a decline as compared to the 2019-18 numbers. But then in India, the story was somewhat different. In the quarter that ended in 2021, June, Indians saw an investment worth around $5.7 billion. But the Chinese investment was just to the tune of $750 million. That's about it. That was the ratio of the Chinese investment in the quarter that ended in June. The entire year of 2020 was also not very good for China, because compared to the quarter 4 of 2019 alone, the investments in 2020 across the year were less. So one quarter of 2019, the last one, had more investments than the entire year of 2020. Now you can blame it on the COVID-19 situation, you can blame it on the anti-China sentiment, on the Aatmanirbharta, whatever. That spillover was also felt in the first financial quarter of June 2021, which ended in June, with Chinese investments just being $750 million against a combined $5.7 billion, which with the US and European investors taking stakes in various startups. Now, this is very, very important. Is this an anomaly? Will the Chinese investments better after, say, a period of time, say 2022, 2023? We don't know that yet. Because compared to 2020, the first quarter of 2021, the financial year, has seen somewhat of an upward trajectory when it comes to investments. But is it an anomaly? Again, that's the question we want to ask. From an investment point of view, the Chinese had been investing everywhere. If I name a few companies, Zomato, Swiggy, Paytm, Big Basket, Snapdeal, Ola, Byju's, Dream11, Oyo. Then you have your Car Dekho, Policy Bazaar, Urban Clap, Nykaa. Imagine the Chinese are also interested in a beauty product company in India. Lenskart, Unacademy, education company, Quicker, Rapido, MXPLAYER, a streaming platform owned by the Times Group, and Tracto. All these platforms had some sort of Chinese investment in them. Now, there was obviously a threat about it. One, of course, the data security threat. We don't know how the Chinese might use their stake within these companies to extract data about the users in India. We don't know how the profiling might work. We don't know what the Chinese might do with their stake. All these things are not transparent. We don't know what Chinese stake amounts to, what are the conditions that they drop within the contract with the company. Do they get the rights to hold any customer data? Do they not? We don't know that. But we have to assume there was a data security threat. Then using that data, the Chinese would have been in a position to design optimized 5G solutions for India. That has been taken care of with Huawei not being allowed in 5G trials in India. I've written about it in a great detail. I'll put the link in the description for that as to why it was a good move for the government to deny Huawei participation in India's 5G trials. And the last problem was that of Chinese propaganda. They are into Byju's, they are into Unacademy. Just to give you two examples, and these are not going to be the last startups in the education sector. There are a lot more startups at a lower scale, but growing with a lot of potential. It's a great market in India. What if Chinese use that tomorrow to peddle their own propaganda? That was also the worry. But for now, post the Galwan clash, the Chinese investments in Indian startups have fallen. Now, if you take Europe also, where Chinese have invested heavily, that also serves a lesson for India. Post the Great Recession of 2008, Europe saw investments worth $320 billion from China alone. Now compare that to minuscule $4 billion between 2016 and 2020 in India. Compare that to $320 billion in Europe. 80 times. That's a huge number. And the Chinese have picked up very, very important critical infrastructure projects there, which can serve some strategic importance. That was the lesson India should have taken, and the government has taken well. Now, the next obvious question arises that we are denying the Chinese money. Does that mean we are compromising the growth of our startups? Absolutely not. Now, Big Basket, which had a greater stake with the Chinese investors, one of them being Tencent, that has been acquired by the Tata Group, and Tata Group is now the majority holder in the Big Basket e-commerce platform. In fact, they're using it to create a super app, just as Reliance and Amazon are. So no, we are not compromising the growth by denying Chinese investors or investments. But the thing is, these companies, they need to, going forward, balance their own interests, their own independence, while continuing to accept Chinese money. Now hold on with me here. There's nothing wrong with Chinese investments in Indian startups beyond a point. For instance, if they are acquiring 5, 7, 10% stake without compromising the independence of the platform, or their clear rules set up with the data security, data sharing, all that is well and good. But say any Chinese investor acquiring 33 to 35% stake, or rather controlling stake, if I might put it simply, a controlling stake or a majority stake in any of the platforms, that's a problem. So yes, India should not act as, not an investor-friendly destination for China too. While of course the inclination should be towards US and Europe and other Western investors and sovereign funds. But with China, they need to ensure that they balance their independence and interests with the Chinese investments, and there's where the victory would lie. Because today, the Indian tech industry, the Indian startup industry, and this is just not about your tech sector, this is even about your Nykas. It might be a beauty products platform, but it has a great market. It is also about Unacademy and Byju's. Look at Byju's, the kind of acquisitions it's been making. Look at Unacademy. India is a great market. We are already trying to transition from 2G, 3G to 4G now and 5G. So there'll be a great market, and these measures are going to be important. These trends are going to be important. Is there more Chinese money? Is there less Chinese money? Where are our major investors coming from? What controlling stake do major companies hold, Indians or otherwise, in these startups, and so forth? So these trends are going to be important. But for now, the conclusion, the writing on the wall is very, very clear. Post the Galwan clash, Indians are not very happy with the Chinese money, and they are not losing out on anything by denying it. Thank you.